Gold smart money setup, demand zone to buy side liquidity. Most traders would sell right here after this drop, but smart money was actually preparing for a buy. Before the real move happened, the market created a major inducement to trap sellers, and then price moved straight toward buy side liquidity. In this video, I'll break down exactly how this setup formed, step by step. If you want to understand how smart money moves the market, follow the channel and support the video by liking, commenting, sharing, and subscribing. Now let's start with the demand zone on this chart. First, let's identify this demand zone on the chart. A demand zone is an area where strong buying previously entered the market. It tells us that institutions or smart money placed large buy orders here. If you look carefully, price moved up very aggressively from this level before. That strong move is a clue that buyers were very active in this area. Now here's the interesting part. When price returns to a demand zone like this, most traders start looking for sells because they see the market moving down. But smart money is often preparing for something completely different. So instead of selling immediately, experienced traders wait to see how price reacts inside this demand zone. And in this case, what happened next created a very important signal in the market. A break of structure. After reacting from the demand zone, something very important happens on the chart. Price creates a break of structure. A break of structure simply means the market breaks the previous high, showing that buyers are starting to gain control. This is one of the first signs that the market direction may be shifting. Now, many traders see this break and immediately jump into a buy trade. But here's where most traders make a mistake. Smart money rarely moves the market in a straight line. Before the real move happens, the market often creates a trap to collect liquidity from impatient traders. And that's exactly what we see next on this chart, a major inducement forming in the market. After the break of structure, the market does something very interesting. Instead of moving directly toward the highs, price starts moving down again and forms this area called major inducement. Now, inducement is basically a trap. The market creates this movement to encourage traders to enter in the wrong direction. At this point, many traders believe the market will continue dropping, so they start placing sell trades or moving their stop losses below these lows. But this is exactly what smart money wants, because those stop losses and sell orders become liquidity that institutions can use to push the market higher. And once this liquidity is collected, the market usually moves toward the next target, buy side liquidity above the highs. After the inducement is created, the market usually moves toward its real target, buy side liquidity. Buy side liquidity forms above previous highs, where many traders place their stop losses or buy breakout orders. Smart money often pushes price toward these areas because that's where a large amount of liquidity exists. So once the market collects the inducement liquidity below, the next logical move is toward buy side liquidity above the highs. And this is exactly where price is heading next on this chart. Now let's look at the buy trade execution in this setup. After the market created inducement and returned to the demand zone, smart traders wait for confirmation that buyers are stepping in. Once price shows strength from this zone, a potential buy entry can be taken near the demand area. The stop loss is placed below the demand zone to protect the trade, and the target is simple: buy side liquidity above the previous highs. As we can see, price respected the demand zone and moved directly toward that liquidity. So that's the complete smart money setup on XAUUSD, from demand zone to buy side liquidity. If you found this breakdown helpful, like the video, comment your thoughts, and subscribe for more trading chart analysis and smart money concepts. I'll see you in the next video.